following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. And we've got at least a little bit of action in this marketplace, not just a one-way movement. We got to a high of 2125.92 on the S&P cash. We're printing off at 2113.92. I didn't think we'd even have a bounce this morning. I was looking for 1 or 2 days, most likely 2 days of a pullback, and then we would decide whether we were going to go higher or lower. Just looked like the market was incredibly exhausted. And I think I wrote in my newsletter on Thursday that we had probably a pretty good high in the biotechs. Maybe it was Friday. I think it was Thursday, though. Along with the housing sector, we were seeing all these different sectors roll, including the IWM and some of these other ones. Of course, the IWM, they ran it one more time this morning before rolling over today. And that's, if you're going to be short this market, you've got to have a ton of patience and be able to sit on your hands. I always loved, there's a quote in Reminiscence of a Stock Operator. And it's a great quote because it really shows truly when you have money at risk in the markets, what it's like. But I guess there was two traders talking in one of the trading palaces of the time in around 1910 or 20 or something like that. Anyway, one guy says one guy had a bunch of imaginary trades, and he said, yeah, a lot of people can talk a good game. It's a lot different though when you have money at risk. It's very much like the two guys that were going to have a duel. And the one guy said, I can break a wine glass stem at 20 paces. He says, that's all good and well. How do you do, though, when the wine glass is shooting back at you? And that is really the difference. And there's no end to the amount of slings and arrows of outrageous fortune than being a bear, probably. And a lot of people would ask you why, and the answer is, while you only have downsides in the market about 25% of the time, and it's easy to be in the upswing that's 75% of the time, because of the huge and incredibly fast speed at which markets reverse and go down, it is normally the place where you can make a lot of money. The biggest trades by a single individual, not a hedge fund, not anything else, have been shorts. Jesse Livermore's short of 1929 netted him $300 million. I think he started with 10 or 15 million, and that was one of the biggest ones. Another one of the biggest one was shorting natural gas at about 1650. And I remember because I shorted it and got out at about 1390. Of course, it went all the way down to $2 or something. It was the single biggest trade on record for an individual. I forget what the guy started with. It was $50 or $20 million or something. Netted him $1.6 billion. I think that was in 2005 or 2006. And in our effort, at least my effort, to go after asymmetrical trades, what will make you as a trader in the long term, you have to take a few more arrows, just like the Pilgrims. But at the same time, it's a lot like baseball. The leading home run hitter back in, 1910 or 15 or whatever, was Babe Ruth. And he was also the #1 strikeout king. But at that time, he was making about $50,000 to $100,000 a year, depending on which team he played for, when the rest of the people were making $2,000 and $3,000. So striking out probably doesn't sound as bad as it did before. You have to be able to take a lot of small hits. Probably mixed metaphor there. A lot of small cuts. Be willing to go short, because it is you're only going to be right about 25% of the time, and it is problematic at best. Volume just over 2 billion shares. Again, we don't have a lot of volume out here. My guess is that if we're going to get volume, it's going to be tomorrow and into Wednesday into this market. Not gonna see people turn on a dime and start thinking this market's going down. We did have a lot of news out over the weekend as to market sentiment, and it was I think it was 4.2% of fund managers that responded said that they were bearish. And that is up in, I think, all-time highs, although there was a similar survey in 1929. So we are pretty much lofty levels. Do I think that the wheels will fall off the wagon and we'll be down to 850 on the S&P cash anytime soon? The answer is no. But I do think that we could have just a normal retracement, which would be an absolute whopper for people that are not used to the markets ever pulling back of significance. I think we've had 100-point pullbacks in the S&P, and you would think that they were 500 or 1,000-point pullbacks. If we actually got a 500-point pullback in the S&P cash, I could imagine that people would be comparing it to frogs falling from the sky and other kinds of horrible things, pestilence, blood running in the rivers, all that kind of stuff. But I do digress. And of course, when I digress, I like to start with a little bit of history.
That it's all just a little bit of history repeating.
And there is nothing new under the sun, dear Horatio. On this day in 1998, the Fed ponders a rate boost months ahead. It reads like a headline in the Wall Street Journal. The Wall Street goes nuts, spooked by the articles that hint at the Federal Reserve will ponder lifting short-term interest rates in coming months. The Dow Jones Industrial Average plummets 223 points, or 2.5%, the equivalent of 700 points today. In a matter of minutes, stocks lose $233 billion in value, and 401k investors make twice their usual level of switches from stock funds to bond funds and cash. By week's end, the Dow, though, is up 82 points. And, of course, this was going into the big bubble that would be long-term capital management in October and November of that year. But there is nothing new. And we only kind of really understand these things as we look at them in a rear view mirror. But on this day in 1998, the Fed kind of whispered boo, and everybody jumped. And that's all I got to say about that. Greece is the word. It is the word. And according to the Financial Times, the guy that runs the treasury there in Greece and his counterpart in Germany, we talked about how they were screaming food fight on Thursday and Friday. Apparently, they can't even talk anymore. It's basically gone to the heads of state, and nobody even wants to talk to Varoufakis. I haven't heard his name pronounced very often. I've heard it 5 different ways. Now I don't know how to pronounce it. But anyway, the Treasury czar there in Greece has basically issued some words that he can't take back. And so the Treasury head in Germany and the ECB pretty much not willing to talk to him anymore. It's now gone to Merkel and basically the King Alexis Tsipras. I at least know how to pronounce that. I've heard that at least consistently one way. Direct to negotiate bypassing the finance ministry because, of course, they all want to throw rocks at the guy. And I don't think that's part of diplomacy, is making sure that no one will even talk to you. But, you know, what else can you say? If you're driving a deal, maybe it's part of their strategy or their strategery, is I would say. But we got to keep an eye on that. But we had a little bit of breakdown today, and that's when the market started rolling fairly quickly. Some rumors of impending war in the Mideast. That's not the people in the Mideast I know. Going back, since I can remember, since I was 10 years old, it's always been a peaceful and loving community. Mideast has never been one to. It's just not the people I know over there. Just doesn't sound anything like them. But we will go. Will be interesting. Anyway, I'm looking for a pullback here for the next 2 days, and we'll see what happens. Of course, we got Apple after the bell tonight. A lot of energy companies this week, and probably not so many tech companies. But I continue to look at and say that for all the people yelling and screaming about the IWM going up because it's in the right part of the market, today it looks to me more like the canary in the coal mine that just fell over. And we're not talking about the one in the Monty Python skit that won't wake up, that was nailed to the perch. We're talking one that did fall over. Anyway, can't really get a hint of anybody on CNBC thinking that this market could go down at all.
Everything is awesome.
That's pretty much their sentiment, is everything is awesome, everything is wonderful, everything is going higher. Maybe it is, maybe it isn't. But to me, the big money is not going to be in the possible bounce up, but the inevitable retrace once it happens. We get gold with a nice little bounce out here today. It's a little off its highs out here. I was kind of surprised that we went down once again in the dollar index. And I was looking for a little bit more of a bounce out here as we got down to 96.47. The low really that we're looking at is about 96.30. I guess you can look at it both two ways. One, it couldn't get down there. And two, it's kind of got about as far as it could and started coming back up. If everything was working and everything was in symmetry, everything was in harmony, we would probably, in synchronicity, we probably would see the dollar index over 97. It's the only thing that doesn't really seem to be working the way that I thought it might be. Of course, the IBB rolled over. We talked about that. But I continue to think that we've got a market that's going to probably have some pretty decent volatility as we look at some other things and numbers. We'll get into them, the trim tab numbers about how much money is coming into this market also. Yeah. More random thoughts? What are my random thoughts about today? Oh, my random thoughts are about Tesla. We'll talk about that when we come back. Give me a call, 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Of course, one of the stocks that's up big today, up 15 points at the moment, was up 19, I think, at the high. At 238.75, the high today, printing off at 233.48 as we speak. Anyway, this was kind of kicked off, I think, pretty much by a short squeeze into earnings for Tesla. And I read the upgrade, and I have to say that of either somebody's totally delusional or they've come out and know that the biggest lies are the ones that are probably the hardest to disprove. But I spent about 10 minutes going through the thought process of this upgrade, and I thought I would share it with you. Again, that is kind of in a deep thought territory.
And now, deep insights and random thoughts.
Okay. So basically the idea is that everybody's going to back up their house and be able to store all the extra energy, which there isn't a whole lot, from solar panels on their house. Now, kind of an interesting idea, except for the fact that we know that the battery packs in a Tesla, just for a single car, not running an air conditioner, not doing anything else. I guess if you lived in San Diego or Hawaii where the temperature varied up or down 10 degrees, maybe you could live with it. But for the other 90% of us where it's either freezing cold or blazing hot, you'd have to have probably about $50,000 to $70,000 worth of batteries. Now, I don't know. I run the air conditioning pretty well down here. Probably pay a couple $100 a month in electric, if not more. How long would it take me to pay that back, since I'm going to have to pay it up front, to buy all these batteries? It just doesn't make sense at all.
There seems to be no sign of intelligent life anywhere.
No, there doesn't. But the idea, of course, is that Tesla's going to make all these battery packs. These battery packs are going to be put at houses. You're going to put solar cells on people's houses. And, of course, at that point, you're going to have the extra battery charge wherever that is, if you can find it. Because I can't run the air conditioners. That would be, if the sun's out, I can run the air conditioners pretty much, and that would be it if I covered the exposable part of my roof. So I get the idea that everybody wants to have a clean planet. Solar cells are a great deal, but they're going to last somewhere between 8 and 10 years. You want now to put in a $50,000 battery pack in my house that's going to last 6 to 8 years before it's just at 50% of what it was doing when it was installed. It'd probably have a maximum lifespan of maybe 8 years or 9 years before you have to start overhauling it. If you truly needed energy backup, you can buy a great standby power supply for about 10 grand. You can put a giant 500-gallon tank of propane next to it. And guess what? Pay for a guy to come out every 6 months, change the oil, fire it up to make sure it works. You got about $220 in maintenance expenses in it. I know people that have done it down here and up north. Of course, as soon as you install it, you never actually use it. Maybe you use it from time to time. Where I was up north and out in the boonies, it was well worth it. In the city, probably a little less well worth it. If we got a hurricane down here, it would be. But total cost, including filling the propane tank, about 11, 12 grand. Again, a whole lot cheaper than $50,000 worth of batteries laying around to run a house. And maybe that's a little less. Maybe you could get by with $40,000 worth of batteries. To me, I just know I'm waiting for the first intelligent human to give me a story that it doesn't sound like it's just full of it. So it's up today. My guess is that, of course, they come out with these wonderful pie-in-the-sky stories of storing electricity chemically that do not fail over time, and they do. Now, you give me the same kind of thing for $20,000 that lasts 20 or 30 years, then I'll start to listen to you. Until then, it still makes an incredible load of good thought to have one big plant where people maintain it and use either coal or probably natural gas to fire it and produce all the electricity you need. If you're out in the middle of nowhere where it's tough to run electrical lines, maybe solar is a better policy, just not to run the lines. But at the same time, those batteries are going to be failing. The solar cells are going to be out there cooking on your roof. They're going to fail. It just doesn't make a lot of sense fiscally yet. And they keep coming up with these blue pie-in-the-sky things. Well, anyway, one man's opinion. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I want to thank Martin for sending me a YouTube video saying how to pronounce the Greek's finance minister's name, but I can't play it on here, or I would. But it's interesting nonetheless. Thank you, Martin. We had a couple other people email me during the break. You can also do that at path@tfnn.com. And basically, they revolve around why do I think that it popped like it did. And the idea was that they were going to be able to get a lot of people to lease these batteries. And apparently someone's going to be a bag holder, just like the CDOs of 2007 and 2008 in the housing market, that they were going to be able to sell this to somebody else. And the bigger fool theory out there. Maybe load up 401ks with it. Who knows what they think they're going to do with this. But to me, technology is great, but there was a reason why Silicon Valley continues to get better each year, and that is because it scales. Chemistry does not scale all that well. There's a reason why gasoline is not 10 cents a gallon and continues to go higher, why technology and chips tend to get more capacity and go lower. There just isn't the scalability of that. But basically, when you dig down in it, the idea is that they'll be able to sign a bunch of people up on this, sell off these leases to unsuspecting fools, is what I'll call them, who think that people are going to continue to pay for these things long after they fail and work, or willing to pay the maintenance on them. But I don't know. I think one of these kind of things where everybody's going to say it was all self-evident. But I'm going to record this and put it in a time capsule somewhere, because eventually we'll figure out all this is just just tell the biggest lie you can and see if you can get away with it. Anyway, we'll start looking at some stocks, because we got a lot of stuff that is moving out here. What else do we got going on here? How did I get Sprint? Got some other ones out here I wanted to look at. What do we got? We got Apple coming up, AAPL, after the bell tonight. And, of course, this is up decent, challenging its previous high of 133.60 with 70 million shares there on February 24th. We're into it with about 50 million so far today. I'd say we're probably, before the end of the day, probably going to try to get up to there. They'll try to run it in the last few minutes. A lot of people short in Apple. I don't think it's a short yet. I've said for a long time that it's going to take a while for this to top out. And it's going to probably take maybe to the next earnings cycle before people figure out that the run rate on the iPhones, new iPhones, is a lot less than people thought. That basically they sold a ton of them up front, and everybody that got one wanted one. And now it's back to the people who drop one will buy one. So you end up with that kind of run rate when people come off contract. They say, okay, I'll go ahead and get a new iPhone. But that's a much lower run rate. The idea was that just as the run rate was peaking and rolling over with these new iPhones, the iWatch would come out and basically taper that down. Doesn't look like we're going to come anywhere close. Looked at the bill of materials on it over the weekend for the watch, and it looks to me like it's about right. They're going to have to sell about 4 watches to equal one phone, which is a ton when you're not selling even as many iPhones as you're selling just lately. So you're going to have the downside to the phones, and why no one says that they put anything in their model for the watches. I just can't believe that. They all were just 2 months ago telling everybody, 3 months ago, telling everybody how this was going to sell huge whopper amounts. And now it's, well, it'll come along in a year. It'll be a big deal. They're still selling the iPhones, and that's fine. So is this thing going to instantly roll over and die? The answer is probably not. It's not like they've got a business that's going away. I am short a couple of stocks that I think businesses are literally going away, like the foundations on a sandy beach. But on this particular one, I think you're just going to see a low, slow fade as people exit stage left. Now, one of the things you should know about Apple is the way that the CEO is paid. He is basically being paid a $500 million if he can keep the stock up to the pre-split level of $100. So right now he doesn't have anything to worry about. He's going to cash in. He's basically 3 years in on that contract, 2.5 years, 3 years. He needs another couple of years, and all he has to do is keep it pre-split above, what is that, 70? Yeah, I think $70. So this thing can fall in half. He's still going to end up with $500 million. But since Steve has left the company and the mortal coil, it is that. Anyway, we're going to go to Tom in Plymouth, Massachusetts. How you doing?
Good, Dave. How are you?
Fantastic.
That's good. Hey, I'm wondering if you could look at the Nugget for me today.
Okay. Bringing it
Got
up.
in on
Go ahead.
Yeah, I got in on Friday, and I'm just looking to see what you think of this.
Well, I probably wouldn't got in on it Friday, but I mean, you're making money, so who am I to say? You're up against resistance. You know, you've got that huge gap down on massive volume. This thing's beating up against it. Frankly, I would probably been on the short side of this instead of the long side. If you wanted to be long, the thing to do is wait for it to break out, come back, fill that gap, and then go long. If you want to do the standard Wyckoff model, which is what I follow. So you've got a lot of risk. Could you get a big payoff here? Yeah. My guess, though, is the thing, normally if I come up to these high volume lows, and this is the third time, this thing's either going to break down or break up. So this is probably a much better time to have had something like a option right here, because you're either going to break up or break down fairly quickly. And that would be my opinion, that, you know, you're making money, and decent money, apparently, if you bought on Friday. But, you know, to me, I always wait for something to break above a resistance level and then come back to buy it. And I don't like to buy ones that have just come off a resistance level. To me, the only safe place to bought this would probably be back down around the $9.70 level. So you basically, it's one of these, you bought it in no man's land, and it could be going up. One of the things you want to watch, of course, is the dollar index. What do we get right now? 96.75 for you. For this trade to pay off, you basically need the dollar to go down and break 96.30. And so you're pretty close. I think you got enough juice on the downside that you won't end up ever losing money as long as you set a stop in. But
yeah, I may look to get out today then with your advice there. That's not a bad one-day hit.
Yeah, I mean, you made some nice money on the thing. I just, whether, you know, it could be going to $20, but if it, you know, you're basically up against this level of high down level, which means it's going to probably take a while for you to chew through there, even if it is going higher. But you got that March 6th down day with 49 million shares. And what do you got out here today? A little less than 20 so far. So there's not real encouraging just yet. Doesn't mean this thing couldn't go sideways for a week and chew through that and go higher. I would just rather wait for it to chew through, break out, and then come back and fill that gap a little and then buy it there. Of course, the people that are, Dave. You bet, people that are gold bulls would say, yeah, but it's never going to stop. It's just going to break out and never give me a chance to get in. And that's always the fear that the market has, but you have to be willing for a lot of these to go by, because there's always yet another trade, may not be in gold, but maybe somewhere else. But yeah, you probably needed to be long this thing somewhere around $9.50, $9.70, I think, to be sitting on it here. Okay, what else do we have? You can give me a call, 877-927-6648. And thanks, Tom, for the phone call. You can also email me at path@tfnn.com. And what else were we talking about? We talked about Apple, talked about Tesla, IBB. And we'll pull that up quietly. You've got a pretty good double repo pattern now in effect. And this is what happens when this thing works, which is if you go above you can do either the 9-day moving average, or what works slightly better is the displaced moving average, although it's a little bit jumpier. In this case, the 9-day moving average worked a little bit better. But you get about 15 days above the 9-day, then you get a few days below it. You come back above it, and the next tick down from there is where you actually see the destruction come in. You're actually seeing that. It's called if you want to look it up, it's called the double repo pattern from Joe DiNapoli, but it's 10. He says it's 10 to 15 days above the moving average, a couple days below it, goes back above it for a while, and the next tick down underneath that is where you want to pull the trigger short. Now, I kind of figured that this thing had run out of juice last week, I think on Thursday in the newsletter, and said, well, this one's rolling over now, and it did. I think that there are better shorts out there, and I've actually pulled the trigger on them this morning for ones where I think the they can fall apart even faster, and it's not bad. But I think that there's some real juice in some other areas out here that I probably like a little bit better than the IBB, just because if we get any bounce on this, this is going to be what everybody runs to begin with. I think that there's some less well-known shares out there. The IBB, 348.76. We got basically 3 million shares already today. You've got a high volume low at 333.78, which is the low of March 26th, and that basically is everything that you're looking for in this, I suspect. So, what else can you say? What else did I want to get to today? A few other things. What's on my list? Oh, something I forgot to actually bring up on my random thoughts. If you were watching CNBC today, you noticed that they were out in San Francisco. What do you think the chances are that the NASDAQ had a major high the day that they open up their studios out there in San Francisco because of tech? Seems like those things happen a lot. Or you go on a trip and everything. You've been waiting for 2 months for the market to break your way. And the day you leave for the vacation, it does. Well, just a thought out there. But I do digress. Did see the Japanese market also. I don't have a chart up for this right now, but closed below 20,000. So it looks like Japan has made a fairly decent signal that maybe it has topped out for a while, and we'll see about that. Let's go look at some more charts out here. There were some things out here that I was looking at. Of course, we were talking about this, or late this week. We're going to start seeing a lot of these energy stocks start to report. Stocks like Exxon and the rest of them. We've had a decent bounce off a huge downside in energy stocks. EOG is one of these. Was what 180, 190 not that long ago. This thing has gone back up, tested its previous high, done it on significantly lighter volume, which also makes me think that energy has at least peaked here at least for the short term, maybe even the medium term. February 23rd, this thing had 9 million shares, $97.88. Went above it on Thursday last week, $99.25, closed below it. Got a little bit more volume on Friday. It's kind of sideways out here. One of the things I think points to an energy sector that is a little weaker, not massively weaker on this leg up, but basically makes me think that we will see a trading range in something like EOG down to 84 bucks, is that the energy was light on this way up, and the testing of the previous high on, 28% of the volume is not a ringing endorsement whatsoever either. And we've had a pretty good run in crude. What's crude out here doing today? It's off 20 cents. But it certainly looks like we're going to have some pretty large resistance levels above this. So the easy money on the bounce is over. More likely than not, we're in a trading range in some of these energy stocks like EOG. Nice trading range back down to 84 bucks on it. We'll be back in a minute.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host of TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're trading off here. Looks like we're going after the lows. Pretty much the whole show out here, the volume just went very light. We had, about 200 million shares during the hour. Pretty quiet. Now we're going down to test the low of days at 21.1077. Anything below probably 21.08, look for an acceleration. My guess is that if people were putting in stops, basically stops if they were long, at least some of them are going to be around that 21.08 area. So they may try to run them fairly quickly if they can down there. And like I said, I suspect this is going to take about a day or and a half to unfold and let us know and give us a clear signal whether or not we've got a top in place out here. I'm not saying we do. I'm saying I'm set up, and I think that the asymmetrical trade here is to be short. The easiest thing would probably be to be long. And I know that, but that's not going to maximize my return over time. Other stocks of interest out here, well, we did all of those. Few others out here that I thought were very interesting. AKRX, we've been talking about this one. Did we talk about this on Friday? I'm pretty sure we talked about this one on Friday. I'm not one to be playing earnings. So I didn't I didn't sell this thing, but boy, what a clear signal out here, and why I spend almost all the shows in the second half going and pointing out stocks that have either tested their highs with half the volume or the lows with half the volume. But Acorn A, KRX, the February 27th high, $55.86, 3.5 million shares with 1.7 million shares on Friday. One of the things really that's starting to look fairly good is just how well these stocks are failing at highs when the energy on the leg portion of these things is also light. I've told a lot of people I thought nothing more than a trading range in a lot of stocks. This is where you start seeing them really fall apart. That is a huge move from February 27th down to the low on March 13th. That happened with fairly large energy. You can see in my power law vector indicator number 5.7 and look at that at 3.6 on the way back, all the way back up. But this one did everything. It proved the point. The downside, is, of course, is you would have had to roll the dice on earnings. And for the most part, unless I've got a really compelling argument, really know the company well, I won't do it. But certainly these are these patterns that we're seeing where these double repos are coming in, and the first close below them is normally just destruction. So keep a close eye on these stocks, especially if you're looking at earnings coming in. EDZ, I think we're looking at, let's look at a little longer out here. It looks to me like we also have some inflection points pretty much coming in the emerging markets and third world out here. Now, the chart's probably a little bit more confusing out here, but the bear ETFs basically are hitting their lines of support, kind of gone through it. Volume was and kind of has been light, but we may get some exhaustion moves out here. And in this EDZ that I'm looking at today, we've got a massive amount of volume without very much movement out here. And my guess is that we're probably seeing maybe some turns in these emerging markets. I suspect that Latin America is the weakest of the bunch that I've seen right now. But just keep an eye on that. In the meantime, sell when you can, not when you have to. And we'll see you tomorrow. Same bat channel, same bat time. Hang on for Tom O'Brien.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.